Yo, what's going on? Today we're going to be going over the biggest killer of profitability, and that is pattern trading. That essentially means taking this inversion model pattern and then just putting it anywhere in the price and then taking that entry simply because it looks like this, or the same goes for the unicorn model, and then the same goes for market maker models. I feel like people pattern trade DOL a lot. Like, oh yeah, we have consolidation, we have to go there. That's not how it works, and that's what I'm going to be covering today. So I have a few DOL examples and then a few model examples. I do use the inversion, so I'm not going to be going over this. And yeah, let's get right into it. Okay, so we have 3 inversion examples. All of them are pattern trades, and these are actually trades that I executed on. So I can show you that I once was a pattern trader. I didn't know what I was doing, and this is how I fixed it. Now, obviously, I'll get into the fixes in a second, but I'm going to show you my mistakes first. So with this first trade, ignore this first entry. I genuinely don't know what I was doing, but why is this second re-entry so god-awful? Well, you can only imagine it's god-awful. Well, because the stop loss is incredibly weak. We have LR at my stop loss right here. I must have held the position, but right here, we don't even hit a key level. We don't hit any fair value gap. This stop loss is not protected. It's literally just a pattern. We run below this low, get an inversion up, and that was enough for me to take it. My stop loss is weak. My TP is, I don't even know. There's just LR on both sides. It is the epitome of a pattern trade. Now with trade number 2, what did I do? Well, I had a bad stop loss, but I had an even worse TP. This high right here, now I had to mark this in because it wasn't there originally, but this high swept liquidity and hit a fair value gap. So it is a high resistance target that has no reason to be returned back to. But here I am targeting it. And at that, I'm targeting it with a 5-minute gap in a premium. You can see we distributed all the way up here. So this is the top of the range, and I'm targeting high resistance. It is pure pattern trading. There's no logic behind this. My stop loss is weak and my TP is stronger. So it's literally the worst type of trade you can take. And then again with this one, weak stop loss, FOMO entry. This is just a bunch of generated low resistance liquidity. And here I am entering at the top. Again, look at this stop loss. We don't hit a key level. We don't even have a stop on. I'm literally just taking the inversion to take it. And then same with this bottom one. This is bad because we just swept out all the targets. Like, I'm just pattern trading to pattern trade. I see the inversion. I'm like a monkey, bro. Like, I just fucking click the button. Like, I don't think. So this is very bad. Now, how do I fix this? Well, we'll get into that right now. All right, now here are 3 examples, and I'm actually going to teach you how to not pattern trade. The key is using liquidity and imbalances to justify your stop loss and target. And now what I mean by this quote is all the reason to avoid, all the reason to attract. What do I mean by this? Well, we'll start with example number 1. So my stop loss is protected and my target is very, very good. But why? Why is this important? This is what you have to ask yourself. Why is my stop loss safe and why is this high not? Well, if you look at your stop loss, you can see, well, we ran into a 15-minute fair value gap and we SMT'd at a liquidity pool as well as swept out this old consolidation and had a stop on. So if I know that price draws to liquidity and imbalances, that's all I need. Once you know that, you're good because you look at the lows. Well, okay, if price draws to liquidity and imbalances, what do we do here? Well, we took liquidity and we rebalanced an imbalance. So therefore, I can assume that price has a reason to avoid this low because it does not offer easy liquidity and it does not offer an imbalance. Very, very simple, right? You simply just use logic. Okay, price draws to these things and these things aren't present at my stop loss. Therefore, that is a good stop loss. That's how you have logic. Okay, well, that's half of the equation done. Why is these buy side targets so good? Well, they have all the reason to attract. Now, just above it, I don't have it in this photo, but there's a liquidity pool above. So we edge liquidity and then we start generating relatively equal highs all in a little, slant, so trend line. So we've generated liquidity, there's an imbalance and more liquidity above. Therefore, if price attracts to liquidity and imbalances and they are available above but not below, wouldn't it make sense that we deliver above and do not deliver below? It sounds really, really simple, and it is. Avoiding these pattern trades is very simple. It just takes a little bit of context and understanding of what actually moves the market. liquidity in imbalances. So if it is not readily available below this low, but it is readily available anywhere above it, then perfect. That's the exact type of trade you want to take because logic is behind you. Logic is supporting this trade. You can see it again in this next example. Right? Well, what do we do here? Well, shocking, isn't it? Right? We sweep out this old accumulation, have another stop hunt, and we hit a fair value gap. So we've swept liquidity and we've mitigated an imbalance or rebalanced an imbalance. Therefore, there's less of a reason to go below here. Why? Well, at this moment, whenever this candle prints, there's no readily available liquidity below it, and there's no imbalance to target because we just rebalanced. But then you look to the buy side. What do we have? Well, we have slanted highs, we have engineered liquidity, we have a reason to go higher, and you can see this distribution just burns through these highs. Because there's a reason to deliver to them. And there's a reason we don't go lower. It's because there's nothing that can be offered there. The two things that price draws towards are not available here, but they are available up here. Therefore, there is a logical reasoning as to why we can deliver higher and not return back to your stop loss. I hope y'all are kind of getting the picture here. You're using your understanding of liquidity and imbalances to make yourself a perfect trader. The same thing here with a little bit of PO3 as well. Well, the 30-minute candle opens right here. We sweep out this liquidity as well as this old accumulation and hit a fair value gap with PO3. I'm not going to get into PO3. I have a video up on that. I highly recommend you watch it, but I'm not getting into that. But so what do we have in this example? Well, we've swept out liquidity and we've hit an imbalance. Shocking, isn't it? You see how simple it is? There is nothing readily available at this high because we've swept liquidity and hit an imbalance. You could say this high, but this high is high resistance. It's just not in the picture. So there's no reason to return here, and there's definitely no reason to return here because there's not an availability of liquidity and imbalances, right? But then you look below. What is there an availability of? Well, you can see that we've been generating liquidity this entire time. There's no major stop hunt here that takes out any sell side. Therefore, there is a reason why we can attract lower. This is low resistance liquidity delivering from high resistance. And that's it. Like, that's literally how you avoid pattern trading. You just use the logic of liquidity and imbalances to justify every single trade. I have a few more examples. Let's get into those. So this is going to be the final example, but definitely the most important. I would definitely make sure that you take notes on this part. So this is how you add context to your drawn liquidity. And shocker, it's a lot like the models. But why is this bearish fair value gap so bad to short? I had a ton of people in the Discord asking me today, Ronan, why were you bullish? Ronan, why were you bullish? Well, it is simply an understanding of liquidity and imbalances. So you can see in this range, we're obviously between this high or this low and this high. So this high right here and this low right here. Okay, well, what happened at this high and low? That's question number one. Okay, well, this low swept out liquidity right here, and it was also in an opening range gap. So just a key level, just keep that in mind. So this low manipulated. It hit a significant liquidity pool inside of a high time frame key level. So this is a manipulated liquidity pool. Okay, well, let's look to our buy side. Was this manipulated? Not really. Well, instead, we inversed this gap right here, so a bullish signature, and then actually edged this liquidity pool. So this liquidity pool is unswept, not manipulated, and therefore there's open liquidity and it is low resistance on this 4-hour chart. See how simple that is? Literally just using high resistance versus low resistance. There is no way we go lower because there's a lack of low resistance liquidity and imbalances to even target. We filled up this imbalance. Now we did inverse, but then we reacted after. So like it's just the market not being perfect. But if there's no imbalances and there's no easy liquidity to go to below, guess where we're going? We're going above because that's the only option we have. Well, what do we have above? Well, we have the rest of this imbalance to rebalance and then low resistance, open liquidity to sweep. See how obvious that is? I'll actually just zoom over to a random spot, right? So at this point, what can I kind of grab out of this? Yeah, okay, see, I'm winging this now. So we sweep these lows. So we'll go off of this example right here. Like, why is this a good reason to be long here versus not be short to these lows? Well, these lows swept out liquidity here, hit this 4-hour gap. I actually have marked this up before, so I do know. So we've swept liquidity and hit a high time frame imbalance. Well, there's obviously now going to be a lack of availability for the two best things for the market, liquidity and imbalance. It doesn't have either at these lows. Okay, well, let's look to the buy side. What do we have at the buy side? Well, buy side, we have an accumulation with smooth highs. Oh yeah, I did this in my AMD video. So we have an accumulation with smooth highs, and guess what? Open imbalance right here, open imbalance right here, multiple imbalances along this leg. So above us, we are offering liquidity and unmitigated imbalances, but below us, we don't offer either of these things. We swept out the entire range's liquidity and hit an unmitigated imbalance. So there's a lack of offering for imbalances and liquidities below us, but there was an abundance of liquidity and imbalances above us. Therefore, I can justify longs here. So honestly, super simple approach. The way that I made this is for simplicity. Context should not be hard. Literally think of it as, okay, there's an availability of draws here, but there's a lack of availability of draws here. Therefore, I think this. It is incredibly easy. Please do not shoot yourself in the foot by trying to pattern trade when you don't have to. Simply use the logic of the market, use the high time frame trends, use your understanding of price, and go take the correct trades. There's no reason that you should be pattern trading in 2025. Anyway, super simple video. I hope y'all enjoyed. If you do have more questions, you can leave it in the comments, or you can add me on Discord and message me there. I am pretty active in my server, and I do live streams every day. So if you're interested in that, then join up. And yeah, hope y'all enjoyed.